Welcome to Cocktails and Capital, the working on your business podcast that feels more like grabbing a drink with your best friend. I'm your host, Sarah Tatum, that best friend. I'm the owner of Tatum Accounting, where we invite our clients to take a vacation from their bookkeeping. In this podcast, I'm going to give it to you straight. Talking points and vague tips, we don't do that here. There's a bunch of noise out there in the entrepreneur community, especially when it relates to finances. And when you're trying to run your business, you just don't have time for that. And I know that you would rather be doing literally anything other than recording expenses and logging into your accounting software. So I'm bringing you practical advice without any of the fluff, just like your best friend would. So turn the volume up, grab your gin and tonic, and let's dive into this week's theme. Hi, welcome to episode 13 of Cocktails and Capital. Today we are going to be talking all about inventory, why you should be tracking inventory, what even is inventory. I'm going to give you some apps that you can use to better track your inventory, and my general tips and some of the tricks of the trade, sort of, for why tracking inventory is so important and why we want to do it. So yeah, that's what we're going to go over today. If you're watching us on YouTube, which, by the way, you can always watch us over on our YouTube channel at Tatum Accounting, you'll see I have two wonderful furry friends with me here today. So if you hear any purring or any barking, it's because I have a cat and a dog sitting right next to me. And the cat is very needy today. So if there's any barking in the background, I really do apologize. But this is a house full of cats and a house full of dogs, so we do love all of our fur babies here. So let's dive right on into what is inventory, what goes into your actual inventory as far as your financial statements are concerned, and then where even do you track inventory on those financial statements. So inventory is actually an asset account. So it is going to sit on your balance sheet. It's going to live on that balance sheet with all the other assets that you have, like your cash, your checking accounts, any equipment that you own. All of that is considered an asset, and so is inventory. The actual cost of the goods sold, like we've talked about many times before, the cost of the materials, and all of those costs are direct costs linked to your inventory, and those live on your profit and loss statement under the cost of goods sold account, which gets taken out of your gross revenue and makes up your gross profit. So then what makes up the inventory that's on your balance sheet? That inventory is going to be the raw materials, so that unfinished stuff that you've ordered in order to make your finished inventory. Raw materials is going to sit on your balance sheet underneath an inventory category, and it's also going to include the finished goods of your inventory. So think of inventory as like two parts. Anything that you order in order to create your product. So if we're creating candles, when we're ordering soy and we're ordering essential oils for our candles, when we're ordering anything that actually goes into that candle, that finished candle component, all of that raw material is going to go onto your inventory asset account as a raw material asset. When it is finished and it's converted into a finished product, then that value gets converted over to a finished good under your asset account. So that's a high level overview. Inventory doesn't have to be that complicated on your balance sheet. Really what you want, if anything, at the bare minimum, what you want is a count of your finished goods in your inventory on your balance sheet. So you want the value of your inventory essentially to sit on your balance sheet and be there as an asset. And you want to update that anytime you sell something, you're going to take away from that asset account. And anytime you produce more inventory, you're going to add to that asset account. And that's exactly where it sits, and that's how inventory works as far as financial statements are concerned. So why do you need to manage your inventory? Why can't we just have a shelf with all of our product on it and just kind of pull from it as we need it, stock up as we need, etc., etc.? So The main reason that you want an inventory management system is because we want to stay organized. And that is really the most efficient and effective way to stay organized, is to have a system, a software that is really helping you keep track of what you have on hand, what supplies you have on hand in order to create more finished goods, and what you're selling and at what rate you're selling it, so that way you can restock as needed. Using an inventory management system also really just helps you make better business decisions, because you're going to be able to get more reports. A lot of inventory management systems will get you reports as far as your cost of goods sold tracking, and allow you to track per product how much you're spending to create each product, and really allows you to set better pricing, set better revenue goals, cut back on your spending. And a lot of those same points that we've talked about in previous episodes, as far as increasing revenue and decreasing your expenses, raising your prices, and overall increasing your profits. So managing your inventory is really just linked up with making better business decisions and being a better steward of your product and your business. The other thing that we want to do is we want to make sure that we can fulfill our orders, right? We want to make sure that we have the product on hand whenever we need it. And so if someone is buying a certain product that you have on your website and it's still listed up there because you're letting them know that you have it in stock, but then when someone goes to order it and lo and behold, you don't actually have that item in stock anymore, you have to order the material, you have to wait for that material to get delivered, and then you have to make the product, and then you have to ship the product. That's pushing your lead time to a spot where it could make the customer really unhappy. We could get a refund request. There could be so many issues that come out of that one simple error where we didn't update the amount of products that we had on hand, and we're not keeping track of our stock on hand. And that all could have been avoided with an inventory management system. And like I said a minute ago, there's so many things that you can learn when you implement inventory tracking. So with the right tracking system, we can really find out which of your products are selling and which products are heading toward essentially being obsolete. So as you're loading on new products to your inventory system, and then you're selling products, so that whether it's online or at a farmer's market or in a retail setting, you're able to track and see which products are popular, which products are really not popular, which products have been sitting on the shelf for months or weeks, whatever your obsolescence timeline is. Tracking inventory will also allow you to add in a whole bunch of new key performance indicators when it comes to your product monitoring. So we can add in things like average shipping time, which is really just the time from the order being placed to the day of shipment. You can add in inventory turnover rate, which is just the rate that inventory is sold or used and replaced. So from the time that you put a new piece of inventory in your software until the time it's sold, that's your inventory turnover rate. So you can add that in. Inventory to sales ratio, you can add in so many new KPIs, and those also include the ability to track KPIs that affect your customer data and your customer success rates. And so if you don't have a current inventory system that you're using and you're not able to track your purchases, it's really, really difficult to track your customer spending habits manually without an inventory system, without a POS system. And it's really difficult to track how customer tastes change over time. The other great benefit that comes with having a more automated inventory management software is that you can take a look at your current inventory process, your inventory workflows, and take a look at the areas that might need improvement. So this can mean things like better organization for your products. You could review the current manual processes that you have and consider how you can better update them to be more efficient, more tech-supported processes. And that really just allows you to free up your valuable time as a resource, because time is a precious resource. It allows you to free up your time, allows you to free up your resource to making more product and interacting with your customers more and generating more revenue. And that's really what we want, right? Another issue that we can run into when we inefficiently manage our inventory, aside from the human capital issue, is that we can run into shipping delays, especially with what I talked about earlier. If we have stock on our website that is not actually there and someone places an order for it, there's so many things that could happen aside from just increased lead times. You could also try to curb it by messaging the customer and letting them know that unfortunately that item was out of stock and you could replace it with something else. But it's honestly kind of a bad look. And it's something that we really just want to avoid in general, right? So the easiest way to do that is to efficiently and effectively manage our inventory. Have you ever sat down for the day to try to make the product that you're selling, and you look at the materials that you have on hand and you just realize that all of a sudden you don't have enough to make that product? That inventory management system is actually super helpful for that, because it should have the ability, whichever software you pick, to keep track of the raw material level that you have on hand. And so as you're increasing your stock level, your raw material level should be decreasing. You should be able to get an alert yourself or have the software alert you so that you need to order more raw material inventory. The other thing that this can really help with, especially on the raw material side, is with making better decisions, because we have access to more data and more analysis. Now, with the raw materials, because it will be tracking how much you're using of your raw material per product and how much you're actually spending per product, you'll be able to take that information and either source cheaper products that are just as good on quality, or talk to your current vendor and see if there's a way to get a bulk discount and order more at one time, and use that information to your benefit. The other thing you can do with more data and more analysis is, again, see which products are trending toward obsolescence, see which products are really selling, see what the customers are loving, see where customers' trends are gearing toward, especially for different seasons, and just see where your products and your customers are kind of meshing together well and where they're not meshing together well. And another really great benefit of an inventory management system is that we can stop spending money on the products that aren't moving. So if you have a product that isn't really visible, it's not on you're not looking at it every day, it's not sitting there on a shelf staring at you, it's hard to remember which products are really selling on a day-to-day basis and which ones are maybe selling every couple weeks, every month, once a month, twice a month. Those are the products that we don't want to invest as much capital, human capital, financial capital into, whereas the ones that are selling every single day, those are the products that we want to invest more money and more capital into. We want to improve those products. We want to increase that customer satisfaction on those products, and those are the products that we want to push further into our product line. The ones that are not being purchased as often, those can kind of trend out of the product line eventually. And that's what that inventory management software allows you to see and allows you to get hold of as far as information. Before I go into the 3 apps that I would recommend for small businesses to get started with inventory tracking, I want to go over some of the terms that you might run into when you're setting up your inventory software. One of them is going to be FIFO, which it sounds like a really fun word, but FIFO is going to be first in, first out. So really what that means is that the product that you made in January versus the product that you made in February, that product you made in January is going to be what goes out first when you sell something, and the product that you made in February will go out second when you sell another order. LIFO, last in, first out, is the exact opposite. So the product you made in February will be sold first, the product you made in January will be sold last. The reason that those two differ is that LIFO accounts for the ever-rising increases in costs for materials and for production. And that is why your recently produced inventory is sold first. It's thought to have higher value than the older inventory. FIFO, you're getting the cheaper inventory out first, so your profit margin on those is higher, and then as you go, your profit margin is decreasing because your inventory value is increasing. So then you would technically, in theory, be increasing your prices as time goes on. So that's short difference in FIFO and LIFO. The other term is your safety stock. Safety stock is essentially the theory of always having extra stock on hand, just in case. And that just in case is really if you have a order that comes in, and it's a huge order, and suddenly you can't get materials in from your supplier. That just in case safety stock is there for just that purpose. It's there so that you can make a shipment real quick, get it out, and then when your supplier finally can get you your materials, you replenish that safety stock and you replenish your additional stock as well. And then on the flip side of that, you have lean manufacturing and just-in-case manufacturing, or just-in-time manufacturing, sorry. Just-in-time manufacturing is literally just making a product when a customer purchases it. And this works great for a lot of business models, especially for custom order business models. It doesn't work as great for businesses that require a lot of stock on hand, and that's where that safety stock model comes in a lot better. Lean manufacturing, on the other hand, is taking any item from your product line that is not selling well and doesn't provide value to your customer and taking it out. We don't hold on to things that are not making us money, and that's essentially what lean manufacturing is. You're trimming the fat, really. That's what the lean comes from. And then finally, I have 3 options for you that you can get started with for inventory tracking. All of them have free plans, and you can always upgrade them depending on your needs, depending on what kind of reporting you want to see, but all of them start at $0.00 and give you a good amount of items that you can load onto the software. And so the first one is going to be Zoho Inventory. It's Zoho Inventory. Zoho will give you up to 50 orders per month, and they also integrate with QuickBooks. Zoho in itself is its own accounting software. So that's a really good option to look into. If you're thinking about the Zoho Inventory route, you can also think about doing Zoho Books and just kind of all-in-oneing your software situation. The second one is Square for Retail. Square for Retail, the free option includes basic inventory management, including barcode scanning, which is really great. Square is a really, really big name out there, and so they integrate with so many apps and so many softwares. Almost every accounting software they're going to integrate with. The thing with Square, the one con is that you probably will have to upgrade depending on the type of data and analytics that you want. Square will give you a lot of analytics on your revenue for free, but once you want some analytics on your expenses side, on your cost of goods sold, then you would have to upgrade your plan. The last one is called Sortly, S-O-R-T-L-Y. Sortly allows you to manage up to 100 items on their free plan. You can only have one user on the free plan, but that is perfect for small businesses. And the inventory tracking is based on pictures. So it's almost like a scrapbook for your inventory, and you scroll through and you list things by pictures, you find things by pictures. And it's great for those running on smaller platforms like Etsy, Shopify, and things like that. So those 3 would be my top recommendations for anybody looking to get started with inventory management. As always, if you guys have any questions at all about inventory management, cost of goods sold, accounting for your inventory, anything at all, please reach out to us at Tatum Accounting on Instagram or send us an email. And I will have links to all those apps listed in the show notes and so many other articles that reference inventory management and its pros. And if you guys need anything, please let me know. And if not, I will see you next Wednesday. Talk to you soon. Thank you so much for listening. If you enjoyed today's episode, be sure to subscribe and follow Tatum Accounting on Instagram. You can also do us a huge favor by leaving a review. It's the best way to support us. Let's catch up next week, same time, same place.